I want to start from the dollar index, obviously, because today we are focusing on the dollar index. And in my analysis, I always like to look at, starting from the larger time frame, how the algorithms are actually positioned in this market. When we look at this market, we have a very long-term charts here showing a market that since basically the highs before 87 has been moving lower. So the long-term trend of the dollar index, as you can see here, is actually lower. And this market actually has been moving laterally basically in the last 10 years here, and in a way has resembled the move that we had on the stock market. I believe that when we look at the daily, we can actually very long term here. We can actually I'll explain why I have those moving averages there later on. But I want to bring the attention to one thing here. The dollar index has been pushed higher by weekly long for some time, and the way I model that is by modeling highs to highs here. And as you can see, this level, the 94.45, has been respected for a number of times, actually 6 times until recently in April, May, beginning of May. This important level, the 92.75, has been pierced on the downside. What's the significance of that? Well, that's pretty significant because that would negate this whole move higher, meaning that the weekly longs at this point were not able to or willing to commit. And that's a very important development, because these classes of algos I follow represent smart money, and in fact everything followed up very clearly here until recently. What happened is that once the bulls were not capable of willing to support this price higher, the bears came in control of this market. And when that happened is when the market rallied up into this 96.83 area. As you can see, the 98 level was never pierced, was never even challenged. And this is this has a very specific meaning for the dollar index in the intermediate trend, because it's showing that bears here are defending this area. They started defending this area in almost at the end of June here. Then the price made another couple of attempts to get into this area, but bears said, no way, you're not passing here. Now, the other important development, though, is that once price came down again into this 94.50 area, we start seeing some participation. Most importantly, look at what happened today. As soon as the price, okay, so today news were obviously negative for the euro. We all agree on that, right? I mean, what happened basically is that Draghi said, okay, we're going to continue our quantitative easing 80 billions per month till March 2017, and he made no assessment about what's going to happen later on. But there is no other option for the euro area at this stage. Just continue to stimulate the economy, pushing money into the system. So I believe that, and you can clearly see here, is that algos have started picking up this market at 94.45. And you shouldn't be surprised, if you know my work and if you know what I do, that this market came back just on top of the 94.45, and then there was a renewed participation on the long side. So what we can see about this market, and this has an immediate effect on the US dollar, Japanese yen, and the pound US dollar. Well, the pound, it's a specific case. I would leave it out for the moment. But for the US dollar, Canadian dollar as well, which is that now this market has the potential to go all the way to the upper edge here at 96.83, and potentially could continue higher as well. Okay. So this is an important aspect, and something important we have to say about the dollar index And this behavior is also supported by what we are seeing in gold and silver. I use them, I can use either or the other one. And what is interesting about silver, and which tells us something about the dollar index, very, very important, is that this market has actually been on a sequence of measure move here. I'm going to remove this timing here. And if you remember back in February and March and April, we actually took this trade in our FX Street Tokyo open room. And I had a lot of people, including myself, of course, excited just because it was a great entry. The market retested this level when it did the first and second target, and then it failed. It failed the next measure move from highs to highs. What happened when it failed is that the market came back in what I call the trend continuation area, and the market just, and we are able to identify this as well before the fact. And the market came back into this area, as you can see here, 16, 18, and then it went to the first and second target. And again, the market, the silver market, actually failed the next measure move, which at this point is actually has an implication that the next long is going to come in the next trend continuation area, which is the 1768. So people who actually traded this long, might be might have been right on a temporary basis. But the reality is that weekly participant in silver will get involved in this market only when we and if we get into 1768. That's the next test for this market. Okay, so what's the implication of this on the dollar index? The implication is that in a way, we know that if silver has to move lower and gold follow, then the dollar index has to move higher. And so this is perfectly in line with the behavior that we saw today. In fact, I suspect that algorithms were actually already prepared to today's reaction and news more than 2 weeks ago here when they start buying again at 94. And of course, I cannot be 100% sure about that, but I keep following my model, so I don't change the way I look at these markets. And this 94 level was obviously an important level after this failure. Things might have changed, but when this level was when this level held here, mid of August, we knew that something was going on here, and maybe the outlook that changed here changed again here, and now the algos might be interested in pushing this price higher. Another market that might tell us something about the dollar index, as we showed before, is actually the dollar index here. And what this market is telling us, sorry, not the dollar index, of course, the S&P500, which is the equity stock index that they actually follow. I follow it because I trade it, and I trade stock for the long term. I also like to follow it to get indication of what could be happening. What could be happening in what could be happening actually in for the dollar index. And actually, yes, we have seen a market here that was capable of, and if you remember the previous reviews, capable of pushing above these previous highs, which were the 2015 highs, and actually push well above that level. And when we look at the weekly, you can clearly see this is the futures. So it's a little bit skewed because of the effect of the continuous contract. But you can clearly see that in 2013, the market continued higher. Then he had a one-year pause, 2015 here, and then he kept moving higher. So this is certainly not suggesting a market that wants to move lower. Now, of course, there can be corrections, but the way I look at this market is that this market has give plenty of confirmation of willing to or wanting to continue higher, and we also have this extension long that is justifying higher price. In fact, this is justifying much higher prices, okay, into 2400. And much higher prices would mean that either interest rate, if hiked, will not have an effect, long-term effect on this market, or there is not going to be any interest rate hike. So I hope you appreciate how many things we can actually see and recognize in price when we study price with the right tools. And there is a lot of consideration we can do from a fundamental point of view, but then some of these, I wouldn't say all of them, but some of these are definitely visible on the charts as well. So what this long-term chart is telling us is that there is participation from long-term algos that is pushing price higher into the into 2400. Okay, so I see FX Ambassador is asking for pound versus Japanese yen, if you still have time, give me a yes or no here. I'll have a quick review of this market, and I took a quick trade last week on this long here. I'm going to show you in a moment. And so the weekly is telling us that this market is still in that 50% short, and it's an extension short as well. And this extension short, we commented on it earlier. I mean, that was after we completed. So as you can see, this extension, actually this was traditional measurement which went into the first and second target, and the day of the Brexit, which is this long weekly bar you see here, target as it the price as it the second target as well. So one way to look at this market is to try to see if longs are still short are still in place here, but it is my belief here that this brief break here has actually reversed this temporarily, this market. And so when we study the daily here, we can see move higher, which actually is kind of at the moment is kind of hitting what I call the dump money. So people will look at moving averages here. This market made almost it into the weekly value area here, and then it came back. So when we look at these two models, the dump money is trying to support this market with a Japanese yen, with the US dollar Japanese yen moving higher. That means the Japanese yen, the yen moving lower. So this should be positive for this market for longs. However, we have to be very careful and also study what's going on in the smaller time frames here. And the smaller time frames has seen basically a market that has moved in a traditional measure move here, and then there was an acceleration, and this market has been moving in extension in its way higher, as we can see here, when it trades from highs to highs. There was participation from algorithms, and we could actually anticipate this of 12 to 16 hours before. who know about this area of participation. The market tested that level, 133.32, just to the pip basically, and then it continued higher into the next measure move. This market actually started accelerating here, as you can see. We had after the fact jumping extension here from highs to highs, and this actually even retested here, and then the market continued higher in extensions, and the market participated again at this 137.33 and then failed. So this market is actually has actually reversed here, and one potential. Hi Haru, welcome. Unfortunately, we are almost finishing here, but this is a weekly show, so I suggest you join us next week on. So we have an extension here in play, but I think that this market will need to test at least the trend continuation higher here, the 134, before we're going to know whether the Japanese, whether the yen is going to continue lower, propelling US dollar, Japanese yen, and pound higher or not. Okay, so I think we reached our time here. So I wanna take the chance to thank you. Sorry, Haru. I mean, you joined just almost near the end of this show. I just wanted to again take the opportunity to say goodbye to everybody. Thanks for joining today. We're going to resume this show, which is going to be weekly on Wednesday, 7 p.m. on FS Street, and I will give my perspective, fundamental perspective on one pair, and then move to charts. Now today we spend a little bit more time on the dollar index. Typically it's 15, max 20 minutes on fundamentals, and then the rest 30 minutes is going to be on charts. So